G'day legends, and welcome back to another video. With just 5 days until interest rate data and 2 days until the weekly candle close, Bitcoin is still sitting in a very interesting position, right above a key high time frame support at 108 to 107,000, where if lost will likely cause the next leg to 98 to 100k. However, the chance of reversals are still on the cards while this key level of support is able to be held. And in today's video, we are going to be going over both the macro and the short-term charts, discussing exactly what is happening, the key levels you should be paying attention to, a variety of technical indicators across multiple time frames, and of course what needs to happen for both a continuation lower and for a bullish reversal. By the end of today's video, you'll have a detailed and well-rounded understanding of what to expect and what to pay attention to. Before we go ahead and get into it, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin, focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, just pure, raw TA. And if that is the kind of content you are interested in, you can join us on Telegram. This is the first link down below, getting access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. And if you're interested in joining the VIP channel, you can do that with the pinned comment. Check it out, contact our admin, or check out these links. Let's go ahead, guys, and jump into the content. So over the past 24 hours, we really haven't seen all that much happen in the cryptocurrency market. We've seen a little bit of upward volatility as we had inflation data come out a tiny bit lower than forecast. We'll touch on that in a second. But overall, Bitcoin has been more or less pushing sideways now for the majority of the last 5 or so days, respecting and bouncing from the key point of support, which is our daily point of support at this 107 to $108,000 level, represented by this gray box. While we are able to maintain above this point of support, the probabilities for corrections begin to slowly diminish. Now, we have been in a downtrend ever since the break of structure deviation at around 124.4, but the risk of this downtrend ending becomes apparent while Bitcoin is unable to break below this key point of support. If we are able to break this support, the next high time frame point in liquidity ends at around 98,000. So that could trigger the next cascade toward the downside. We'll break all of this down in more detail today. In terms of the upcoming weekly candle close in 2 days, the total cryptocurrency market cap is currently doing a fantastic job at maintaining above 3.65 trillion. If that level is lost on the weekly chart, we will likely see extended corrections for the cryptocurrency market, something we'll come back and discuss in a second. Let's start on the market data, 24-hour volume and 24-hour liquidations. Of course, moving out of the week into the weekend, volume is beginning to drop a little bit, so are liquidations. 250 billion in terms of 24-hour volume, 218 million in terms of liquidations, down about 6.9%. Of those liquidations, we still have a pretty even split between longs and shorts. 122 million coming from shorts, 95 million coming from longs, so definitely not aggressively skewed in any direction, and that is a clear representation of the short-term chop and indecision we are seeing here in the market. Taking a look at the DXY has been in an uptrend for essentially 10 plus years, bouncing along this respectable uptrend we can see represented by the diagonal trend line. For us to see extended corrections, we will need to lose this monthly 200 EMA, which will result in this uptrend being lost and likely corrections further into 92 to 93. In terms of the weekly chart, for the DXY to push higher, we need to clear this major point of resistance at that 100 level. Now, of course, what happens with interest rates will very likely impact the DXY, so we're watching and waiting to see how that data comes out. Taking a look at inflation, we can see here inflation data came out better than forecasts. Our forecasts are around 0.3. We saw month on month come out around 0.2. If we take a look at our inflation rate, it was 0.4. It came at around 0.3. So we saw about a reduction of 0.01 below those forecasts, and that is perceived to be bullish by the market as inflation didn't jump up as much as anticipated as a consequence of the prior interest rate reduction. Now, this increases the likelihood we will see an interest rate reduction this month. What is very important we need to understand is the market likes to front run and price things in. So it is likely that this interest rate reduction has already been priced into the market. Therefore, if we see an interest rate pause, it is very likely we will see a significant correction. So the only thing we're watching in terms of the news there is, are we going to see a pause? If we see a pause, the market dumps. If we see an interest rate drop, it is likely we see a short-term recovery followed by a continuation of the current trend. And then secondly, we are watching that Federal Reserve press conference following the interest rate decision, because that is going to shine more light on their decision, but also shine more light on their narrative that they're establishing and their path forward, which the market will utilize to adjust to and set the tone for the rest of the price action moving into the next month. So pay attention to that. Moving over to the S&P 500, the S&P 500 has pushed upwards quite aggressively following the inflation data. Of course, for us to then expect continuations lower, we are tracking that 50 EMA, the daily close below the 50 EMA. That is going to be a trigger of a further corrections lower. Until then, just watching that 50 EMA, watching this uptrend, and of course, respecting our key levels of horizontal resistances which have broken, provided interest rate data comes out relatively good and provided we don't see any significant adjustments of tariffs. It is likely the S&P 500 may continue to push here up into 7,000, provided this prior high is able to maintain. I do want to point out we do have bearish divergence over here with this breakout, so there is a chance this breakout will not maintain and we might actually see a correction develop from here. So pay attention to that, as that is a real risk. I'd be very much waiting to see how this interest rate data comes out for the rest of the month before jumping in and making any decisions for the remainder of October. Let's go ahead, guys, and jump into Bitcoin. Before we go ahead and get into it, make sure to sign up to BitGet, Bitunix, and BingX. The exchange links are down below. You'll get a lifetime trading fee discount of 15% off all your trading fees. You'll support me making the content, and you'll support yourself trading on exchanges I use and I trust. We'll play an ad and we'll jump back in. If you are looking for a new exchange or just want to support the channel, sign up to Bitunix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to Bitunix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on Bitunix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, let's go ahead and jump right back into it. Now, I want to start on the weekly charts and then build it into the short term. So, as we know, in 2 days' time, we have got our weekly candle close. So by the time we do our next video, that will be just after the weekly candle close. So we need to talk about it in today's analysis. In terms of the weekly chart for Bitcoin, the weekly chart is looking good on the macro, but it is showing some significant weakness, which could develop into higher time frame corrections. Now, we know already that for us to enter an extended high time frame macro correction, for us to enter a quote unquote bear market, we need to see from a technical perspective the loss of 3 very important levels. Number one, that is going to be the weekly 50 EMA represented by this red line. Number 2, that is going to be the Gaussian channel upper band. And number 3 is going to be the RSI. The RSI line we are watching is 44.9, which is around 45 essentially. It is essentially the low we have retested on the RSI throughout the periods between 2023 and present. every single time we have tested that level on the RSI, we have seen reversals toward the upside begin. Major reversals toward the upside begin. Again, this is essentially the momentum line we are watching representing the bull market. Therefore, the loss of this level will likely result in a steep correction for Bitcoin, or the end of this pattern we have seen being playing out over the last 2.5 years. So for us to enter a bear market, or for us to enter a steeper high time frame correction with targets at around 88,000, 78,000, and potentially even lower than that, we would need to see those three levels broken. Until that happens, there is always hope of reversals and continuations into new all-time highs. So I want to make it very clear that until that occurs, the potential for reversals are still on the table. It's not about whether or not it's possible or not, it's about whether or not it is probable. That is the market. The market is probabilistic, okay? We need to look at things from a probabilistic perspective. In terms of the weekly candle close, the levels we need to maintain above to remain optimistic on the higher time frame, and as you already know, I do expect this downtrend to continue to some extent. We have been bearish since 124,000. We do anticipate the market correcting a little bit more unless some short-term triggers activate, which we'll discuss in today's video. But we need to also understand where these key levels sit on the weekly for reversals to develop. In terms of the weekly chart, we can see the current weekly candle is still sitting underneath the bull market support band. For us to see some good signs on the weekly, we would need to break above the upper band of the bull market support band around 113,000. On the weekly, we would need to close above to give us a fighting chance of continuing up on the weekly. If we close below anything below 113 on the weekly, it is likely we are going to see continuations downwards into the new week. If we're looking at the RSI again, we are still underneath this uptrend on the RSI. This is less relevant now as the breakdown has already occurred and momentum is now already negative, but we are watching this uptrend closely as a potential rejection point if any sort of reversal does develop into 113 and above into the new week. In terms of the weekly chart, the key levels we are really watching are going to be these lower points of invalidation rather than trigger points for reversals. If we're looking at reversals, we are watching a short term a little bit more. So that is what we're watching on the weekly for Bitcoin. In terms of the weekly chart for the total cryptocurrency market, we are watching the $3.65 trillion level very closely. Again, the loss of $3.65 trillion on the weekly will confirm to us we are going to see steeper corrections to $3 trillion and the market will pull back. Bitcoin will come down to 100. Potentially 98,000 if that correction plays out. So watching 3.65 trillion very, very closely. That is the key level we need to stay above. Let's go down to a smaller time frame now for Bitcoin. If we're taking a look at something like a 4-hour chart, we can see Bitcoin has been in a downtrend since this 125 or 124 break of structure deviation. We of course had bearish divergences developing through its entire trend upwards. We had a 6th of October top as predicted by the 1064-day bar theory. Since then, we established a short-term downtrend. We then of course saw the tariff news and mass liquidations pushing us all the way into around 102,000. We've since bounced, retesting 116, establishing a lower high, and from there we have established a second lower high at 114,000. So to put it very simply, the downtrend is still in play. This is still a downtrend as we've been establishing lower highs along the trajectory of this price action. For us to be confident the buyers are back in control and the price will push higher, we need to see one very simple thing. We need to see the price break and maintain. And by maintain, I mean show strength above, meaning we're not breaking above with negative momentum, we're not breaking above with divergences, we're showing strength above the prior lower high at 114. We can see already the 200 EMA is crossing through at level. We need to break 114 for us to be confident the price is going to attempt to push back up into 118. And we know 118K, as we have seen in the past, is a trigger for rallies up beyond 120 and into all-time highs. So breaking 118 opens us up to a possible new all-time high again, and for us to retest 118, 114 is the level we need to break. So 114 above, we turn bullish again. 118 above, the potential new all-time highs become a reality. 114 and below, the downtrend is still in play and lower targets are still the expectation. That is how we're playing it. Yes, upcoming potential news can play a massive role in impacting these probabilities. Yes, interest rate data and most importantly, the Federal Reserve press conference can also play a massive role in impacting the probabilities, but from a technical and a structural perspective, we cannot expect the trend to reverse until prior lower highs are broken. In terms of continuations lower, this is where it gets very interesting because Bitcoin saw a dramatic correction toward the downside, and since then we have been kind of consolidating sideways with reducing volatility. Now we know volatility is reducing because number one, the highs and lows are starting to diminish in distance, and of course the EMAs are beginning to compress, so we're seeing a reduction in volatility, hence why we're seeing liquidations being a lot more compressed to one another. Shorts and longs are more evenly liquidated. This is a sign that there is essentially just a lot of chop and indecision in the market. But if we're looking at the potential for further corrections, particularly into this next level of support at 98 to 100,000, for that move to establish, we need to see the loss of this uptrend on the RSI. We need to see a breakdown on the RSI, which would signify a negative momentum shift. If the negative momentum shift activates, that is going to be our trigger, our expected beginning of this next move down. So at the moment, the best way I can describe to play this and how I am personally playing this market right now, between 107 to 108 and 114, I am more neutral with an expectation that the trend will continue. So more neutral to bearish. Breaking above 114, I become more bullish to neutral, okay? Because breaking 118 is where we turn bullish again. And of course, either the loss of 107 to 8 or the loss of the uptrend, the RSI, is going to be the trigger for that downtrend to resume into 98 to 100. Now, 98 to 100 is a very important point of support. Again, if we take a look at the higher time frame, every single time we have retested that key point of support on the RSI, and again, the respected levels at the 50 EMA and Gaussian channel upper band, we have seen reversals upwards into new highs for Bitcoin. So there is a chance we see a correction to 98, and then we continue back upwards. It all comes back to how is the momentum going to be as we approach the level. If we break this on the RSI and we retest, it is likely we correct lower. If we come back to retest and the RSI is established and holding and momentum on the higher time frame is still strong, there is a chance we see reversals. So I think there is a little bit of optimism still for the buyers. I can see why there is optimism, but we need to pay attention to the short term now, as the short term is really leading the way for the higher time frame chart. So pay attention to all that, guys. Let's quickly wrap up the video on the altcoin market, and then we'll catch you in the next one. So really quickly, the altcoin market, there isn't too much to say. I see a lot of people still yapping on about altcoin season. To put it very simply, we made a video last time. It is very unlikely we ever see an altcoin season like we saw in 2021 or 2020 and 2017 ever again. The reason being is because there's just millions and millions more altcoins in this day and age than there were back then. Before, we had 2,000 altcoins, we had 5,000 altcoins in 2020. Now we have like 1 million altcoins being created a month, if not a day, okay? So there are significantly more places for people to put their money this time around, and that spreads out the liquidity across thousands or millions more places. So each individual altcoin doesn't seem to perform as well, or we see rotations occur, which is what we've had. We've had a rotational cycle and a narrative cycle where not every altcoin goes up, but we see select altcoins performing exceptionally well, and then they do bad, and then other altcoins do well, and that cycle continues. When we're looking at the total altcoin market cap, however, we can utilize this to understand when rotations will begin again. And for us to be bullish on altcoins, for us to start taking altcoin positions, for us to expect the altcoin market to do well again, we need to see two things. Very simple. Number one, break out the RSI. Number two, break out the 2020 and 2024 high. We need to break this resistance. Until we do that, we do not expect anything miraculous to occur from the altcoin market. Thank you for tuning in, guys. Have a fantastic rest of your day. I'll catch you guys all on Monday for the weekly candle close. See you all then. Bye.